All right, here we are with this week's Mortgage Minute with Tatiana, and it's going to be an exciting one because we're talking a little bit about interest rates, which we all saw in the news, and we'll let you dive into that in a little bit. But catch us up. What's been going on with the interest rates this week?
Hi guys. Yeah, so let me have my handy dandy PowerPoint presentation. And I need to do it somehow. Hold on a second. So right here. Can you see?
Yep.
Yes.
Perfect. All right. So the interest rates decreased for the sixth straight week.
Yes.
From the last week, average was 7.22 to this week average 7.05%.
Wow, that's a big drop.
Yeah.
That's according to a primary mortgage market survey from Freddie Mac. So the 15-year is at 6.47, and last week it was 6.56. The current trajectory of the rates is an encouraging development for potential buyers, and there's more loan applications. And the prediction is that there's going to be uptake of demand the next month. Right now, I don't see too much activities going on the market. I think because people are busy looking for Christmas presents.
Yeah.
But I personally think that after the New Year's, after they're done with all the celebrations and handovers, they're gonna come back on the market and start looking, and there's not, the inventory is going to remain low because of so-called the golden handcuffs. And the golden handcuffs, back in late 70s, this term was popular to explain why ambitious professionals stayed with companies like General Electric or Procter & Gamble, instead of trying something new, because they were staying there because they were paid a lot of money. So now we can use this term for the housing market. So during pandemics, people could get mortgages with low interest rates like 2 and 3%. Those low rates are like golden handcuffs for them, and the only reason why they would move now is life goes on, right? Something happens. Maybe they relocate with job, marriages, divorces, they outgrew the current property.
Yeah.
So those are the only ones that I would think that need to move and sell. Need to sell. That's why the inventory still stays low, and with rates going down, more people are gonna come out again, try to buy a property again, multiple offer situation again, artificially driving that prices up because there's gonna be more people to want property again. So
I love having that terminology to use. That's brilliant. That's a perfect way to describe the people, the reluctance to list homes right now.
Exactly. And so I also have one more slide on a home price prediction here. That shows that Fannie Mae think that price will gonna rise 2.8% by the end of the next year. Mortgage Bankers Associates think that's gonna be 4.1%. National Association of Realtors and Realtor.com are less optimistic about that, but I would think that around 3% should be about right. What do you think?
I think it's going to actually be higher than that, because this year we've seen 4 to 5%, especially in our area. Now that's nationwide, so I can't really speak to those numbers, but in our area we've seen regularly 4 to 5% easily, and that's with the higher interest rates. So if all these buyers flood the market again and the inventory stays restricted, based on that other slide, it looks like there's only really about 8% of the owners that are, 5% or above in their mortgages. So they may consider moving for, reasons just because they want to, but anybody under 5% may not want to hit the market unless they have to, like you said. So if that inventory is going to stay really low and these buyers are going to start flooding the market again, I don't see how it stays under 5% appreciation. I would say more 6 to possibly 10%.
I was going to say much closer to the 4% than the 0.7%.
Yeah.
Because
definitely 1.7% is complete underestimation. In my opinion,
that's really insane.
I think NAR is trying to cover themselves. They've got so much going on right now. I think they're just trying to
we don't want to be wrong.
We don't have an opinion. So 0.7. Okay.
Realistically, too, let's talk a little bit more about our area of Northern Virginia, right? The DC metro area. We're all very blessed to live here.
Mm-hmm.
We all typically, have higher than the national average incomes. And so I think another reason that people are going to end up listing their homes for sale outside of the divorce and the need, right, that life puts on us, honestly, is boredom. People here have enough income to just go ahead and I'm tired of this house. I'm bored. I want to live across the river, or I want to try this. I want to try that. And so they're a lot more able to do that. And I think that boredom will set in. I haven't done any research on this, but it just kind of feels like every 3 to 4 years, people are just ready to do it.
Yeah. We've got buyers that are already starting to, our previous buyers that are already starting to list their properties and start talking about listing their properties for life changes. Like you said, they bought a condo and they got married, or just because they're like, I just, I thought I was going to move out to Loudoun County and be happy out there, but I need to get back closer to the city. So there's just all kinds of varying reasons.
We've even had some who bought a house and they renovated it and they love doing it so much that now they want to do it all over again. So they're ready to sell it and then do it again.
So various
reasons.
So
it's not boredom too. I think in our area we are going to have that.
Plus we have a lot of cash buyers here, so they're not really affected by the interest rates so much, and they own the houses clear and free. So we'll see what happens, but I think that my personal opinion, 4% appreciation is kind of low for what's going to happen next year,
and
assuming what they're predicting.
Staying right where I am.
That's right. But I have a question for you. So I'm gonna go ahead and jump into the topic because I'm actually really curious
about that. Finished about interest rates. I was all feeling dynamic about interest rates today.
That's what our market report was about too. We dove into the interest rate. So this is perfect. That graph was actually really helpful.
Sean started trying to shotgun some numbers and I'm like, whoa, we need to wait for Tatiana.
So that was one of the things. Well, I'm not going to put you on the spot to come up with the numbers, but so the question that I have that we've had from some different clients. So we had a young couple that was purchasing a house together, and we were having the conversation. And they were asking me, is it better for us to both go onto the mortgage, or should we do it individually? What's the benefit? So my answer to them, and you tell me if I was right and wrong, and then you can kind of give us more expansion on it. The benefits to purchasing a home separately would be like if you have a plan of investing. Isn't there a limit to how many traditional and conventional mortgages you can have at one time, like 6 or 7, something like that?
10.
10. Okay. So if
10 financed properties.
Okay. So if you buy 10 properties as a married couple, then you can only buy 10 properties. But if you buy 10 properties as husband, you can buy 10 more as wife. You can use traditional financing for 20 properties. So that's one point of leverage. The other one would be where you're actually keeping your credit separate, so that
you're talking too much and you should let.
He's answering his own question. That's awesome. I like it.
I know. Stop and let her tell you if you're right or wrong.
Okay, go.
No, go ahead. I like it, and then maybe I'll just add something to that. I like it.
Okay, I'm gonna shut up. Go.
Yes. So is he right on that? Like, does it offer more leverage to only put one spouse on a mortgage?
Oh no, yeah, absolutely. I agree with that. So because just for those reasons that you described, and also let's say it's a young couple and they buy in as their first time home buyer, and one person is on a mortgage and on a title, and then spouse wants, they want to buy something else in the future as a primary resident. So they could buy under another spouse, being a first time home buyer.
So get two first time home buyer benefits.
Exactly. Okay. And the first time home buyer benefits could be potentially a special program with zero money down payment, depending on a, you know, state and county, but also typically first time buyers get better interest rate. There's some adjustment, positive adjuster to interest rates when you are a first time home buyer.
Okay.
There's some income limits with that, but in general, that could be beneficial. And exactly to your point, if they are future investors and they know they want to buy more properties, 10 properties in financed properties is the limit per person. And if they really want to expand their portfolio, each buys separately, that also would make it twice many properties per couple.
Are they allowed to have one spouse on the mortgage but both on title?
You can do that as well. However, if another person is on the title but not on the mortgage, that person is not a first-time home buyer anymore.
So for the first two transactions, you wouldn't want to do that.
Right.
Okay.
Right. So because if you add in a spouse that you want to buy something later as a first-time home buyer, but they're already on the title. So I think there's misunderstanding on who is considered first-time home buyer. Right. I think people think that if I'm not on the mortgage, I'm a first-time home buyer. But if you're on the title, you already own a home, so you're not a first-time home buyer, even though you're like not on a mortgage.
Yeah,
it's more like a first-time home owner program and not a first-time home buyer, right? It has more to do with, hey, you got a home, than it does, hey, your credit is attached to a home.
You got a mortgage. Okay. Yeah.
Okay.
So I think an important
that's a good point.
Important thing to say here is that if somebody's considering this strategy, especially as first-time home buyers, they need to speak with a lender like yourself, but then also with the title company, because the tenancy, the ownership of the property is important, you know, for asset protection. Should somebody pass away, how does the transfer of the property happen? So they just need to make sure they understand all of the ins and outs of that versus, you know, just the financing aspect.
That's a very good point.
Yeah. But I like the idea of having those, especially if you're an investor looking to build a portfolio. When you can get into properties with as little money down and as little expense as possible, that gets your return on any money invested. So it's a good strategy for the first two, as long as they understand the tenancy effects of that. Right. Okay.
I have a question.
Yep.
Yeah. To build on the whole, both spouses want to take advantage of the first-time home buyer programs and benefits. Is there a time limit on, like, let's say Sean does a first-time home buyer thing and he's the only one on the mortgage and title. And then I get another house and I'm the only first-time home buyer. I'm the only one on the mortgage and title. Is there a time limit, or if at all, can we add each other to our titles?
Well, so it all depends on that second property. What is the use of it going to be? So right. If it's going to be your primary residence, you are buying primary residence with intent to occupy it for at least 1 year.
Okay.
So if they're thinking that Sean is buying primary right now, and then you, Kelly, want to buy another investment property under, then it doesn't matter if you're first-time home buyer or not.
Right.
That's only the first-time home buyer benefit applies only if you're buying another primary. So it could, good example could be for that new married couple, right? So they got primary home right now. They got a baby, twins, triplets, I don't know. So they move out of the property in 1 year or you know, more, and then they want to buy something else bigger, another primary residence, and then that could be under wife's name or husband, whoever is first-time home buyer, and at that point we could add another spouse to the title as well, because at that point that person already is not a first-time home buyer.
Right. Okay, they do have to be and this comes up. I mean, it does, people asking, well, we'll just tell them that we're separating, like them being the mortgage company, and that's the big MF, right? That's mortgage fraud, right?
It is a mortgage fraud. I would never advise anything like that.
No.
You never want to do that.
Okay,
well, they can pull your loan, they can do all kinds of things. So yeah, you don't want to do that.
That's why they need to talk to somebody.
Yes.
Okay, so I have a question, and I'm glad you shut me up because I'm glad we're deep diving into this. So
I delicately shushed you.
You have that first time home buying couple. He buys the house in his name. They find out they're pregnant. They find out they're having triplets, same scenario, and they bought a 1-bedroom condo. And so in 9 months, they're going to have 5 people living in this 1-bedroom condo. Their life situation could seriously warrant, even though their intention was to live there for a year, they have a significant life situation where they would need to possibly move out sooner.
I guess there's questions, could they get an exception?
Yeah, would they still, would they be able for her, because they want to move, they want to have a new primary residence, they want to get out of this house. Can she go and do the first time home buyer? He's the one that committed to a year over here, but he's kind of wanting to get, how does that play out? Is it intent? Is it?
Yeah, so there's intent. It's intent, but there's always circumstance, right? Okay. And that's what the bank could potentially ask: why are you moving? Why are you buying another primary residence? And it's been less than 1 year. This is very legitimate explanation. So of course they would have to explain and get exception for that, but in my opinion, I don't want to be stuck in a 1-bedroom apartment with 5 people. So it's logical that people want to move.
Okay.
But also remember that she is not a homeowner.
Right. Yeah. I'd say it's just making sure there's no fraud in that transfer. And then of course, after they bought the second house, the year happened, she could add him to the title. And then theoretically, after they did that, they could add her to the title over here, and then they could both be on titles.
They've gotten both benefits. Both of them have gotten their first home.
And then if they add each other to those titles, they still have the 10 mortgages each, because that's title, that's not mortgages.
Right. Even exactly, because we're talking about financed properties.
They're still under financing, but they're financed under the individual.
Separately,
Okay. I had this conversation with these first-time home buyers, and I was explaining this to them that there's a credit protection there that could happen as well. And so I'm curious, is that something that you've seen, or a strategy you've seen used to kind of keep that wall between the two credit worlds?
Well, definitely the credit will not be affected of the one who is not on a mortgage that is being foreclosed on. In regards to any other implications, if that person is on the title, that's more like a title company, settlement attorney's question, because they would need to find out, even if you're not on the mortgage, but you're on the title, you sign certain documents at the settlement, and that's in regards to foreclosure procedures. They're gonna be signing deed of trust document that talks about the foreclosure and possibility of it. So that question is more to the title attorney. But in regards to the credit being affected, definitely if they are not on a mortgage and the mortgage is late, that person is not going to get affected.
So it's separated.
Well, I have a hypothetical, so that's all great, but it doesn't always work, just because sometimes one person's income is simply not enough. And if that's the situation, you have to have 2 people on the mortgage.
So I have one other question, scenario, getting back to this. How significant of a difference would you say the credit score would have to be, so if like the husband has a really good credit score and they're planning on buying the house in his name, and then they find out his income isn't enough, so they have to use his wife, what difference like in their credit scores would be detrimental? Like if he's got a 760 and she's got, let's say, a 640, is that going to really hurt the mortgage, or does that, how significant is that difference?
I guess you asked like a breaking point.
Yeah, what's the kind of a breaking point for that?
Yeah, so we're gonna use the lowest of two credit scores.
Oh wow, okay.
So it all depends on how much down payment they're making. It could negatively affect the qualification and the terms if he has 740 and she has 640. I noticed that if they put a lot of money down, like let's say 50%,
yeah,
it doesn't really make too much difference at that point because it's just huge down payment. But lower down payment, the significance of that could be huge, especially if they put less than 20% down, because remember there's going to be a mortgage insurance, and that amount could increase on conventional loan, would increase with the lower credit score.
Right.
So you're saying that 740 and a 640, it's not like they kind of average it out. You're saying it's just now it's 640 for both of them.
Yeah.
Wow.
Correct.
Like the application is
at the lowest.
At the lowest.
Okay.
Yeah.
Okay.
Right. We pull credit. We pull tri-merge. So if each person gets 3 scores from Equifax, TransUnion, Experian, but then we'll look at the middle score of each, and middle is not average. So let's say he has 760, 740, and 720. So 740 is his middle, and she has 660, 640, and 620. So 640 is her middle. It's lower than his middle, so we're using hers.
Got it. Okay. Okay.
Yeah.
That makes sense. Makes it a lot clearer.
I think I've told you that like 50,000 times, but maybe with a beautiful accent, hearing it, it'll sink in.
Okay. All right. All right. Do you have any other
I
questions?
have nothing.
Tatiana, do you have anything else?
No, that's it. I just want to wish those who celebrate Hanukkah, happy Hanukkah, and
yes.
For that.
We'll talk next week.
Sounds good. All right. Have a great week.
You too.
All
right.
right.
Bye-bye.
Bye.